This bear market is about to take money from a lot of people, and in this video I'll explain how and why so you can avoid it and potentially make some money from it. It's frustrating because in the crypto space right now there is so much emotion, which doesn't really do well with trading or investing. Everyone's so desperate for the bull market to come back that when they look at the market pumping, they can't see it objectively. Well, I'm here to help you keep your money and even profit a little bit, so give me 5 minutes, go to 1.5x speed if you need to, and I'll help you make smarter decisions with your crypto portfolio. And yes, I'll talk about whether or not I am personally long right now. I'll talk about whether or not I think the bull market is back. And of course, I'll even include strategies to help you profit off of the current move and market. I never claimed to be the best trader in the world, but I'm up thousands of percent from when I first started about 6 years ago. I've been with the market through the ups and the downs, and crypto has helped me reach financial freedom in my mid-20s. I want to help other people avoid my mistakes and maybe do the same and reach financial freedom themselves. So before you buy into a bear trap or sell before Bitcoin flies up to $100,000 plus, make sure you subscribe to the channel so I can give you everything you need to know on when to buy and sell this crazy market. Now, to understand what's going on in the market right now, we're going to take a look at 2018. And for those of you who were around, you'll remember the 6K support level right over here. Everyone was certain that this was the bottom. All the technicals lined up. It made perfect sense. People were talking about how they're accumulating to build their generational wealth, going all in. There were legitimately tweets about people dropping everything, going all in with their net worths. And what happened next? Well, if you take a look, the market crashed down from 6K, 50% down to a low of 3.2K. And even when we were at 3.2K over here, people were convinced that we were going to go lower and potentially drop down to, say, 1K. Now let's have a closer look as to what was actually happening over here as the price was bouncing up and down. You can see here, price came down, made a low, and then made a lower high, another lower high, another lower high, consolidated, actually one more lower high there, and eventually crashed. So it's actually not too surprising that it continued to crash lower, because you can see the 6K level continually getting weaker. Every time the price bounced, it was weaker, 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 no strength left, crash. Now this is very important to look at because all of this we can later apply to the current market. Now, one of my favorite things to look for when we're trying to catch these bear market rallies, which you won't see in the first one, but you'll see in the next two, are disproportionate green candles. Now, these are green candles that in context are way larger than anything else that was happening at the time. A good example is here in April 2018. We had a long period of the price going down, and then here you can see one very large green candle. Now this is the largest green candle we've had since this previous run up here in February 2018. And if you put this in the context of the recent moves, it's much larger than everything else. And it completely consumes all of the price action here, and it's just a bit larger than this big red candle here. So proportion is really important. And following this, we see a nice steady move up. Now this is extremely basic. You don't need to be a genius to do this. And one of my most popular trading lessons ever is on this candlestick analysis. Now you see this and you assume the price is going to go up. However, look, we're still in a bear market. Price is still coming down repeatedly from all-time highs. So if we see a big candle here, look at it in context, I'm not going to think, oh, the bull market is back. I'm going to think we have a short-term rally and an opportunity to make money. So if you take a look, we have 8.9K, 9K resistance here. And then if we go up, we've got another key level over here with 2 data points, this top here and this bottom here at about 9.5K. And if we go sideways, you can see price goes up and hits these two levels. Our next resistance would have been up here at about 11.5K. And you guys know one of my favorite confirmations for that is this moving average over here, the 7-day. So if the 7-day got above this level, we'd assume continuation, but it didn't. So if you wanted to make money, you open along here after the candle close, you've got a 13% move here and another up to 25% move there. That's good money for swing traders. Afterwards, price continues to go down. We have another mini rally here. You can see somewhat similar to large candles following a move up and then all the way back down. And then the rest is consolidation into the dump. Everything you've seen now is going to be extremely useful in analyzing the current market. So now we're on the weekly. Let's take a look at the current market. So everyone, just like before, look, the market is in an extreme downtrend. And here, what do we have? One big green candle going up. Does this mean the bull market is back? Does this mean the bottom is in? Absolutely not. It might be, but we do not have enough evidence to make that conclusion yet. Throw in the moving averages, we can see a very clear downtrend on the weekly. We're also going to mark out some key levels. We've got resistance over here between 20 and 21K. And then the next big resistance is up here between 24 and 25K. After that, we've actually got some room to run to about the 30K level for the next most significant resistance. So key levels and trend check. Now let's go to the daily. So on the weekly, we've seen some disproportionate candles, and that is this move up right here. So continuation is absolutely a possibility right now. Unfortunately, unlike before, we've gone straight into resistance. So this 20K level here is extremely significant resistance. I will share exactly how I will play a move like this to potentially catch up to about 20%, just like before. I've got specific points I look out for to enter the market and specific points I look out for to exit the market, and I'll share all of those. But whatever strategy you use, it's really important in this market to make sure you just don't lose your funds to third parties. With all the companies going down now, today it was just announced Genesis is going down as well. It's harder than ever to know who to trust. So the best strategy is to trust absolutely no one. Assume whenever your funds are with third parties, they are not safe. Split your funds, use multiple exchanges, and follow good security practices. I'll make sure to link a security article in the description below for anyone who needs to brush up. I've been working hard for the last 3 months figuring out where I want to do most of my trading, and I've actually split between 4 different exchanges. I use 2 for trading and another 2 for on-ramping, off-ramping crypto, and also trading large spot positions. I'm still researching a few of them before I'm comfortable sharing, and I'm also trying to negotiate as best a deal as I can for everyone following this channel. So for today, I've got Femex. They're doing a $6,000 deposit bonus. There'll be a link in the description below if you're looking for somewhere else to trade these markets. I'll get more deals as soon as I can and share them as they come. So if you have somewhere to trade, these are the trades I'd be looking out for following this move. So if you're really bearish, and I'd be careful being bearish here, just again, take a look. This is a big disproportionate green candle. It's very unlikely we see a dump following this, because even if you look back in the market, you can see when we get big disproportionate moves here, this candle isn't even that disproportionately big compared to the other ones. We see a follow-up of another big green candle. It's very rare to see one giant isolated pump of a candle and no follow-up. So if you want to short, this is the best time to do it right now at this moment at this 21K level. Personally, that's not what I'm going to be looking for. If you guys take a Fibonacci retracement from the bottom of this move right over here, there's 2 levels I've got my eye on. Here, 20.4K, and down here, 19.640. Now, these are the key levels to watch. If the price comes down, it's a solid point to enter the market, because as long as we stay above the 0.382 level, that indicates a lot of strength in this current move and potential for follow through. Even if we don't fully follow through and go up, there's normally going to be a solid bounce from the 382 to at least the 0.236, which will give you about 4% to play with and a good margin of safety. As for invalidation, there's 2 different levels I take. Number 1 would be the 19K. Normally, it's possible to have strong moves that retrace down to about the 0.5, which is where this 19K is. But given the macro bear trend, I'm not satisfied if we do come back to 0.5. I'd rather just not be in this position. So I don't love it if we lose this 0.5 level, because we've just come back to this previous range, which we're in for quite a while, between these 2 levels, which slight deviations above. And that's the 20 to 19K range. If we exit this range, that's my invalidation, I'm out. And then the hardcore invalidation will be 18K over here below the 100 moving average, which we actually haven't been above for a while, which is promising to see. But again, we can have a trap like we did over here, where we go above and then crash right back down. So what have we got so far? Entries 0.236, 0.382. We've got invalidation at either the 19K level, or if you want to be really hardcore, 18K level. Personally, I prefer the 19K level. Those are entries on retracement. You've also got the other option of entering on confirmation of a breakout. For that, I'd adjust this level slightly because I like to be a little bit more aggressive with these, and wait until we get this 7-day moving average solidly closed above it. And we've got about 14% to play with here, which is more than enough to wait for a confirmation and then catch the rest of the move after. So let's say price goes up, you miss the first 3%, and you enter here, and then you catch the last 10%. That's totally fine. A solid play over there for the breakout. Huge resistance between this 24 and 25K level. I'm going to expect us to struggle there. And then if we get above that, we've got the final level, 30K. Now, if we get back above 30K, I'll officially have transitioned this market from mostly bearish to closer to neutral. While we're below the 30K, just assume total disaster bear market conditions below 30K, especially with the terrible news happening in the market right now. I hope this video helps you make better decisions in the crypto market. Guys, you're going to be seeing a lot more of me on the Market Meditations channel and the main Cruciate channel.